peak was, you know, Terra Luna is worth $70 billion. And, you know, Do Kwon and a couple of people are all of a sudden the whales. And I think the bubble popped on this cycle when the Fed started raising interest rates. To your point, Jerome Powell is the most powerful person because he sets the price of money for $500 trillion worth of assets. So that's a pretty powerful job. When they took the short-term rates, you know, from 6 basis points up to 470 basis points on the 1 year in 12 months. And so when the Fed started tightening, that put pressure. The first thing to break was the most fragile thing, which was a poorly engineered, unstable coin called Terra Luna. That brought down 3 arrows. 3 arrows crashed and brought down Celsius and Voyager and BlockFi, and it fatally wounded Alameda, and maybe we'll see what happens with Genesis, but it definitely fatally wounded a lot of other players, but it wasn't obvious. And the reason it's not obvious, again, is to make this point, is publicly traded companies have a fiduciary obligation to disclose transparently within 4 business days or less on an 8K. Like if my CFO said, guess what, we just did something stupid and we lost $1 billion, I don't sit on that for a year. I don't sit on that for a quarter. Like some number of hours at 9:30 a.m. on Monday when the market starts trading, people are trading my stock. And if I have material information that a rational investor would think is material to their buying or selling the stock, I have an ethical and a legal obligation to disclose it. And it's pretty obvious why. I mean, if you were on the other side of the trade,
I would want to know.
Yeah, so it's Celsius. Celsius went and they borrowed $500 million from, you know, I think Equity First or something. And when they returned the money, they didn't get their collateral back, and they got, you know, somehow they they borrowed money, and then their creditor kept their collateral, and they lost $500 million. But they didn't disclose it to anybody for a year. They just kind of went on and they raised more equity from pension funds, and then they took more deposits, and then eventually they were rendered insolvent. And then at that point in the bankruptcy, you find out that a year and a half early, they just made a $500 million boo-boo. Huh. Okay, and that's what you're finding out with Alameda. You will find out that, oops, it turns out that like 12 months ago, they lost $3 billion, but they didn't tell anybody. They probably didn't tell, I bet you they didn't tell their equity investors. Yeah, nobody puts $1 billion into a company with a $30 billion valuation if you made $1 billion trading errors or $2 billion trading errors. So what you had was a bunch of opaque private operators that they were in essence lying, dissembling, or it's like, I didn't technically lie because FTX didn't lose the $1 billion, Alameda lost the $1 billion, and the investors, you know, they should have said, wait a minute, these companies are all related parties, and unless I know the financials of Alameda and Paperbird and FTX and I can compose it all, there's no way that I can put money in this. And I think that, you know, the answer is when you're private, people can cut all sorts of corners when they're doing private deals. It's like, so Sequoia, they're adults and they blow a few $100 million. Okay, adults doing stupid things, but they're adults. Ripple's an unregistered security. It's pretty obvious. There's a company. The company owns a bunch of it. They sell it to the general public, but they never took the company public. There's no disclosures, right? So the SEC's position is you're selling an unregistered security. It's a crypto token, right? Just like Ethereum is an unregistered security. It's controlled by a few people in the Ethereum Foundation and Consensus.
Fair. Then here's a question.
Just like FTT, just like Solana.
Perfect. But here's a follow-up on that,
They're all
Michael.
unregistered securities.
Here's a follow-up on that. Right. I don't own a single Ripple, just so we know. So full disclaimer, I'm not a Ripple guy. But if both of them are unregistered, why target Ripple and not target Ethereum the way he is targeting Ripple? And by the way, this is coming from a guy that owns Ethereum, not Ripple.
Yeah, I think the best thing for the world would be if the SEC pretty much shut down all of it. It's all unethical, right? I mean, the Bitcoin position would be Bitcoin is an ethical commodity. All of these other altcoins are unregistered securities. They're all just equity tokens issued by a company in order to get around going public, and they're committing securities fraud.
Ethereum included.
Of course, especially Ethereum. You know, Ethereum's got $20 billion of ETH token locked up in the staking contract right now, and there's a couple of people that may or may not give it back to you ever. Now, isn't that the definition of investment contract? If a bank took $20 billion of your assets, froze the window and said, you can't have your money back ever, maybe in the year 2024, we're not sure. We're just going to keep it. We may actually give you interest on it. We may take it all. We may, we may slash it. That's the definition of a security, right? It's an investment of money in a common enterprise, relying upon the efforts of others and expectation of profit. The whole point is, if you want a crypto asset to be a commodity, you can't rely upon 4 engineers, a company, a CEO. If a person can make a decision, it's not a commodity anymore. The fact is, Ripple's got a company, Ethereum's got a company. Ethereum Foundation has engineers. You are literally waiting on the engineers that work for the Ethereum Foundation to write the code to give you your money back. And then you're also waiting to find out what the monetary policy will be. They change it half a dozen times in the last 6 years. It's always changed.
XRP and Ripple the same thing?
They're both unregistered securities. XRP and XRP is just the equity token of Ripple. Yeah. I mean, it seems quite obvious, right? If you want a roadmap for how you create a commodity, you have to do it the way Satoshi did it. You create a protocol, you give it to the world, you disclaim beneficial ownership of it, you disclaim control of it, and you disappear. That's what Satoshi did. It was a gift to the world. If the founder's still around and the founder is a billionaire and the founder is spending hundreds of millions or billions of dollars to defend the token, isn't it obvious that it's a software company with an equity? So I think that that's pretty evident with all these crypto tokens. What you have is you have the complete sham Ponzi schemes, like the collapse in a hurry, like Terra Luna. Then you have crypto tokens that are unregistered securities that are perhaps somewhat pseudo-competently managed that don't collapse, but they're still unregistered securities, which makes them unethical to promote. And then you have cryptocurrencies like Tether and Circle. They attempt to have backing, right? Circle purports to have 100% backing for their coin. We know that like 83% of Tether deposits are backed by U.S. Treasuries, if you're to believe their attestations. But again, those are not publicly traded companies. So I think the one thing that's missing in the crypto industry is, by and large, nearly everybody in the crypto market has never taken a company public. They don't understand securities law. They're like, if you're going to be kind, you're going to say they're well-meaning technologists that are enthusiastically pursuing new ideas. But generally, they're pursuing new ideas in an irresponsible, inappropriate, unethical fashion.
Is that based on greed? What is that based on?
The same reason Sam did it. Is one part greed, one part enthusiasm, go fast and break things, one part lack of adult supervision, right? What you could say is that the regulators ought to just be very, very clear. If you were very clear, you'd say, look, you've got like 180 days in order to register your token with the SEC, and you register and fill out these forms, give us all these facts, answer our questions, and we'll tell you whether you're a currency, whether or not you're a commodity, whether or not you're a security, and whether or not you're allowed to trade. And at the end of the 180 days, if you haven't actually registered, you're shut down and nobody can buy and sell and trade this thing anywhere in the world. And that would actually clean up the industry in a hurry. I think we're really close to the bottom of the deleveraging cycle. I think we've taken out a lot of the bad actors. I think that a fire is lit under the DC the DC politicians and the regulators. I think that we're going to get clarity, and I think that that clarity is going to bring in a bunch of institutional money, a bunch of institutional banks and big investors and big corporations. And at some point, you know, maybe now, between now and the end of the year, we're going to get to the bottom of the market, and then we're going to begin the next bull run. And I think that we'll be midway into a really nice bull run, and Bitcoin's going to be, you know, way north of where it is right now. By the
north of the high of 60,000 or north of 100,000, or
I don't want to give a hard number because it would be irresponsible of me, but I just feel like Bitcoin has suffered the deleveraging, like that. You know, guys like FTX, they took $10 billion and then they panic sold it, or fire sales sold billions of dollars of assets, and that's what's got us to where we are. Once all of the bad actors and all of the irresponsible players have fire sold and, you know, panic sold all of their Bitcoin, then what you've done is you've transferred it into much stronger hands. And so I think that certainly we ought to be back to a solid place.
If you love that Michael Saylor clip, you'll love this next one from later in the same interview. So click on this link.